Welcome to My Finance Teacher. Today is Sunday, 29th of October 2017, and this week has not been very eventful in gold. It basically lost slightly more than $10 over the week, and the more interesting part is what is it going to do over next several weeks. Well, I think gold is going to continue its decline as we are in the declining phase of this intermediate cycle. We topped at about 1360 in early September and we are going down. I think we have not reached the bottom of this, the low of this intermediate cycle. I think we'll probably reach it close to mid-December with the FOMC meeting. So we still have some downward momentum as we are, as I said, in the declining phase of this intermediate cycle. So let's have a look at some factors that I think support this possibility for gold to continue moving down for another several weeks. One of those factors is the strength in US dollar. This is the US dollar chart in front of you. And since early 2017, since the beginning of the year, dollar has been in this unusually long decline, and it's possible that in early September it's reached finally an intermediate cycle low, and if it has reached its low, it's likely in an advancing phase of a new intermediate cycle, which promises some potential strength here. The daily cycles in dollar last for about for anywhere between 1 and 2 months. Since early September, we've been going on generally up for 2 months already, so one might think we are reaching the top of this daily cycle. However, if this is an advancing phase of a new intermediate cycle, these RSI indicators can get deeply overbought, potentially giving us again an increase in the dollar index going into this FOMC meeting with the expectation of a rate hike, and after that we might see a daily cycle low, which will probably give us a relatively long daily cycle in dollar, and with general negative correlation with the gold price, that tells us that gold might continue going down for another few weeks. Again, some other factors can be seen if we look at Fibonacci retracements. We've retraced much of this rally already. The recent daily cycle low retraced 62% of the rally we've enjoyed since early July until early September. We've bounced back up from this support level and continuing down. We are probably going to break it. And the potential support level where the decline might finish is close to 79% retracement. That's a price level of about $12.40 per ounce of gold. Besides Fibonacci retracements, some other factors that help us to look at gold price performance and possible expectations for that performance are these trend lines. There is a trend line that we've discussed for several weeks, a few months back. This triangle consolidation of gold price that has been looking something like this for a couple of years already, and at the end of summer we broke through that consolidation zone, and we might retest this downtrend line a couple of times before we move upwards with the new advancing phase of a new intermediate cycle. If we continue gradual movement down until the mid of December or so, again we might reach price levels of around 1240. So that is another possibility that we can see on the charts. Another possibility related to the trends is this long-term trend, as I mentioned before, pointed out to me by one of the subscribers, a trend that looks something like this. A trend that actually is similar to the downtrend line of this triangle consolidation zone, relatively similar. So we might retest this long-term trend again, which doesn't rule out the possibility of gold price moving down for another month or so into the price level of 1240. Another factor that supports my expectation for the gold price to continue its decline for another month and a half or so is the expected rate hike by mid-December. Generally, as we've seen over the last more than a year already, gold tends to move down in expectation of rate hikes, and after that starts moving upwards. So that's sort of a sell the rumor buy the fact scenario playing out. We might see something like that again near the end of this year. And interestingly enough, if that turns out to be the case, then we'll see that these sort of yearly cycles will tend to reach their lows in the end of these 3 years, 2015, 16 and 17. So that may play out as a general pattern again. And lastly, another factor that also supports a possible decline in gold over the next several weeks is this performance of gold miners. This is GDX chart in front of you, and gold miners usually move in anticipation of gold price movements, and we've seen that GDX has actually broken below the recent low we saw in early October. So it's a possibility that gold also breaks that recent low and continues down, as I said, to the price levels of 1240 or so. Thank you for your attention. Hit the like button and subscribe. Bye bye.